You're the founder and CEO of Simfuni.
We lived in about 18 different houses from when I was 6, till when I was about 18 before I moved out of home and became the first person to row solo from New Zealand to Australia. A total adventure. It was like landing on the moon. I ended up living in San Francisco as the VP of growth for North America. We would never be able to beat Afterpay. We needed to go and raise 200 million to have some success there, or partner with a monster that could fund the growth. I kind of just started looking around those particular spaces and then fell in love with insurance. Simfuni is a full end-to-end operating platform for life insurers. We're able to deploy AI agents onto the most common questions that come in from a customer.
This is Mark Publikowski, and welcome to the TechMates podcast, where my partner Henrik and I explore how Kiwi and Aussie founders are reshaping the future and what sets them apart. Henrik and I have been part of successful companies in Silicon Valley and Europe, and now bring that expertise to partner with entrepreneurs in Australasia. By sharing the personal stories of successful Kiwi and Aussie founders and how they got here, we hope to inspire you to dream big. This is TechMates, bringing an outsider's perspective to the stories of those daring to disrupt down under. Let's dive in.
Shaun, thank you for joining us on TechMates.
Thanks for having me. I'm excited to be here and catching up with both of you.
Yeah, so you're the founder and CEO of Simfuni. You just raised another round. Congratulations. Simfuni is not your first venture, so we want to learn about all your previous entrepreneurial experiences. And as always, we want to start with what was your growing up like and what made you become an entrepreneur. But let's start with maybe where you grew up.
Yeah, awesome. Well, I was actually born in Singapore, funnily enough, a New Zealand family. My father was in the Navy and he was based and serving with the Royal New Zealand Navy out of Singapore. And so my brother and I were based there, and obviously an amazing, cool place. Lived there till I think I was maybe 3 years old. So as you can know, I've got fairly limited memory of Singapore and growing up there and what it was like. But then we moved back to New Zealand. Well, I went to New Zealand for the first time, and I think it was a bit of culture shock for my mum because we moved from Singapore, this beautiful, highly amazing place, to Wairuru in New Zealand, which is in the middle of the North Island in New Zealand, and it's basically an army base, and that's it. And so there is sheep farms and a bit of skiing and basically tanks and machine guns. And so the nightlife's a little bit different to Singapore's. We spent a little bit of time in Wairuru before moving to Auckland. So that was we moved to Devonport down there, where there's the New Zealand Navy's based there. And so Dad was serving his time there. Then my parents got divorced when I was 6, probably a consequence of moving from Singapore to Wairuru, you'd have to say. And then we basically started one. I think it was exciting, but in some ways challenging, where I ended up moving around quite a lot, and we lived in about 18 different houses from when I was 6 till when I was about 18 before I moved out of home and did things. But it wasn't a bad childhood. We just moved a huge amount, which was a combination of my parents meeting new people and lots of change and how you move in the military, and then all sorts of different things. So look, I had what I think is a great childhood. I got used to change and got used to working through change, and that made me, I guess, who I am today. So I look at it with a really positive sort of gratitude sort of mindset.
Yeah, and so moving all these times also means like new schools, new friends, new environments. So that must have been like challenging as a kid, right?
Yeah, I think sometimes I was pretty lucky that I think my parents acknowledged that consistency with schooling was important. So we were moving lots, but kind of around the same areas, which was really important, right? Like I think that was where I struck gold. My folks understanding that is, if you can keep that consistency, it's pretty helpful. But, in some ways, learning to deal with more and more change would have made me more resilient as well. And I think as you get older, I'm 40 now, you kind of look back on all this stuff, which at the time you're like, shit, that was hard, that was awful. And I think I've become more and more grateful about some of that. Even the most awful of shit that happens sometimes, you go, well, actually, that's just stuff. And when when, as both startups, you have to deal with hard things all the time and figure out how to basically just continue to move forward and acknowledge that something's happened, but, having a full analysis of how bad it is and how terrible it is not going to help. You just got to charge ahead. And so I think that's a lot of learning you get from a childhood where you've had some change and a bit of adversity.
Yeah, that's funny. So it's almost like you got to like suppress the negative feelings to power through. So maybe startups kind of select for individuals who have like maybe some like maybe not the best at psychological development, like, right? Folks who are like,
I think it's like something like that. I mean, I've always liked the thought that if you've got this negative feeling, then ask yourself, like, how's it serving you? So how does dwelling on this serve me to move forward faster?
Yeah,
right. So
yeah.
acknowledge it, great. Like I'm feeling aggrieved. I'm feeling entitled to something I missed. I'm feeling like I deserve that when I didn't get it. And you're like, well, how's that going to help you, man? How's that going to help you go forward faster? 9 times out of 10, it doesn't. And so you got to move on and bolt yourself onto those feelings which help you power ahead.
Yeah. Shaun, I was going to ask before we kind of dive into that, like, is it common for the New Zealand Navy to be based in Singapore and to, like, were they training there?
I think they've got quite a good relationship. I think New Zealand and Singapore have a strong relationship, that they have a big exchange program with the military there. And so I think New Zealand, sort of that's being active in the Pacific region, serves the security of New Zealand well. And so being aligned to Singapore, who's friends with most of the world, is also pretty good. And kind of that whole Australia, New Zealand, Singapore connection and everything that's going on. But that was, embarrassingly, that was 37 years ago, Mark. So I'm assuming that they're all still friends, but I think
I've just never. I mean, I know the U.S. has military bases overseas, and you can be on an aircraft carrier that is maybe stationed somewhere overseas. But like, I've never heard of like two countries sort of. That's just interesting. I'm surprised that.
It's a real Commonwealth, so the Commonwealth do it quite a lot. So you'll they'll have big naval exercises, and you'll have Canada, England, Singapore, Australia, New Zealand will do a joint exercise and different things. So growing up with it, that was always quite common. I think that as part of the Commonwealth, you're serving the greater empire, as they call it, but that nostalgic alliance sort of stuff still exists. So I think that's kind of where it all comes from.
And was your mom a Kiwi?
Yeah, mum's a Kiwi. So mum was born in Motueka, which is around Nelson, and so Dad was British. So Dad moved from a place called Hull in England, and he relocated to New Zealand. A really interesting guy. He had sailed around the world a couple of times in the tall ships races as an 18-year-old. So the tall ships, the big old square rigger, big pirate ships. So he left home, I think, 17, and basically started becoming a sailor and sailed around the world, and then went back to England and joined the Royal Navy, and then decided to move back to New Zealand, or move to New Zealand, and actually he went on a big adventure. He became the first person to row solo from New Zealand to Australia. So he was a big adventurer. So it took him 63 days to row from New Zealand to Australia. So it was pretty cool, pretty inspiring dude.
Holy shit. How old were you when you did that?
I wasn't born. So he was 36, I think. So I think I started ruining his life probably when he was about 40, and not ruining his life, hopefully enhancing it. But I arrived when he was like 40 or something like that. So 36, I think he rode the Tasman.
Which you did as well, right? The other way around.
Yeah, that's right. Yeah. So and that was totally the catalyst. So Dad spent 63 days. He left from Hokianga in New Zealand and rode to a place called Marcus Beach, which is just north of Brisbane, around a place called Noosa. Crash landed at 7 o'clock at night. Like, really cool. Still the only person to have done it. It's pretty wicked. I think in 2027 it will be 50 years since she's done it. So it's pretty neat. In about 2008 I was 22, and I was sort of sitting there going, man, it'd be pretty wicked to be the second person to row the Tasman Sea but in the other direction. So Dad was the first one way. I really wanted to be the first the other way. And I kind of just looked at that opportunity and went, wow, how wicked would it be to have two firsts like that in the family, and just probably got really competitive at the thought of someone else doing it. And thought, man, this is mine. I got to take this. I got to go for it. And so started building a boat, and I reckon that's where I learned how to raise money, started convincing people that, this dream was possible. I could get my little boat from from Australia to New Zealand, and yeah. And I
Hokianga
spent
is here.
days
Is that
rowing.
right?
Yeah. So Opanoni, if you look where Opanoni is there, so go out to the coast more. Yeah, you're almost there. See, there it is. Yeah, that will work. That will work. So he left from there. Yeah, there's a really good pub in Opanoni actually. So you go there and he rode all the way to Marcus Beach. So pretty crazy adventure.
Just beach. Wait, so how do you do that? Do you like do you have to I mean you have to obviously pack food and water for 2 months?
Yeah, totally. You just got to pack a whole lot of food, whole lot of water. Your boat's got to be kind of unsinkable. There are so many
Wow.
variables. I
So
think
he actually like
now
he
it's
went like north a little bit as well.
yeah, big time north. There's a big circumpolar current which spins clockwise around Antarctica and moves up in between New Zealand and Australia. And there's a whole lot of different currents like the East Australian current and a few things. But when you're leaving from New Zealand, typically you're going to get pushed north, and that's a
Uh,
combination of weather and current factors.
hmm.
And that got them all the way up to, and you don't, if there's a big storm while you're going across, you're going to end up somewhere else totally different as well. Only takes like 3 or 4 days of the wind blowing in a certain direction for you to end up somewhere quite different. But yeah, it's about, I think, in a straight line, 2,100 kilometers, so 1,000, about 1,300 miles, I think. And so yeah, man. So I left from Coffs Harbour, and I was aiming for Taranaki the entire time, and in a straight line. That was 2,100 kilometers. But I ended up rowing 4,470 kilometers because I went around in like 9 loops. It's
You
just
did
a
what?
crazy little adventure.
What do you mean?
Well, so because you're rowing and you're rowing an 800 kilo boat, and so you actually don't have that much control of, there's not that much horsepower behind 2 oars. So any wind, any current, any adverse kind of condition is going to have quite a dramatic impact on the boat, how fast that boat can row, or what direction you go into. And so sometimes it's so wild in the ocean that you just need to go and sit in the cabin and wait. And one particular moment in time, I was in the cabin for 7 days in a row, and I and basically went round in a 130-mile wide circle, just because I couldn't do anything about it. So you just had to wait that out. That was on day 10 of the trip. And then basically when you can go and you can go fast, you've just got to row for as long and as hard as you can to make as much mileage as you can. And when the wind's against you, you sometimes just need to mitigate the loss. And I remember sometimes just sitting there rowing for 15 or 16 hours, and I'd gone backwards 10 miles during that time. And so it was just a matter of but if you weren't on the oars, you would have gone back with 50 miles or 60 miles. Some amazing lessons in building startups as well.
Oh, so wait, Shaun, when just like so you started here and then you basically kind of like you said you went in like some loops here and then where did you end up in New Zealand?
I ended up on 90 Mile Beach, so actually really
Okay.
close to where my dad
So here, right? Somewhere? Okay. Interesting. Huh.
if you Google, I think if you Google Shaun Quincey, there's a map that comes up.
Really?
Yeah, I think there's a map which shows you exactly. Yeah, that should do it. If you've got images, we'll see. Hopefully, this could be terrible, but yeah. So there's the boat.
Wow. This is the boat.
Yeah, I built that. Yeah.
You built this boat.
Yeah. I
So
built it.
was there ever a moment during the like 50 something days where you're like, I'll give up? Like, this is too hard. I'm not going to get there.
Oh, like 300. Yeah, man.
So how do you push through? Like, what's the
Yeah, totally. I think that.
secret?
So look, I think on day 4 I wanted to give up. Like there was so many moments. That was where I was sitting there and I was rowing and I was just like, man, this is just way harder than I thought it was going to be. And so because it is so hard, you're sitting there just going, do I have what it takes? Am I going to be able to get there? This is far bigger than I thought it was going to be. And so I remember sitting down and just going, man, I'm going to set the boat on fire. I've had enough. I've totally had enough.
Wait, so
terrible.
But Shaun, like, where would you sleep on this boat? Like on this boat, right? Like
So
where do
see
you?
the back, so see where I'm like the words tasmantrespasser.com, there's a cabin inside there. And so I could get inside so if you're looking at that, the picture of the book, front cover, where the solar panel is, that's where there's a full cabin in there.
Okay. Oh, you wrote a book about this.
Sorry?
You wrote a book about this. I didn't realize that.
Yeah, man. Yeah. Best-selling author, as they say. No, I think
Wow.
I did like 15,000 copies in New Zealand or something. So
Wow.
it's pretty cool. But where that solar panel is that's where I slept in there. But yeah, I built that and lived on it for 54 days, and then it's in the New Zealand Maritime Museum now. So it's a cool little part of history.
What if at some point, like, you wanted to, like, sort of to just like, what if you just wanted to abandon it at some point? Like, was there any way you could have just like phoned it in and been like, all right, I'm done. Take me out of this?
No, you can't really. Like, it's kind
Really?
of like it's not like a capital round where you can say it's too hard, I'm going to give the money back or whatever it might be, man. Like, it's like I was in the middle when there's one particular time where I flipped upside down, and I've been trapped upside down for about half an hour. It was 10 o'clock at night, and like emotionally it was like just really full on. And so I got hit by another wave after about half an hour. The boat popped back up again, and it was really interesting. When I'd been being inverted, it set off a few little alarms and things, which told my shore crew that I was in a little bit of trouble and might need some help. But literally, help was 6 days away, and you're relying on a container ship to kind of swing by and pick you up. When you think of the actual practical likelihood of that happening, a container ship isn't a rescue vehicle. A container ship is like a massive piece of metal moving through the water that's really hard to steer. So that they can't pick you up. They might be able to get within 500 meters of you, and maybe they have a really long ladder. But even rowing up next to that thing is almost impossible because, the waves are going to move. So if that thing lands on you, you're going to die. And so, like, you're not going to get rescued. And so you kind of just got to be ready to deal with all sorts of different scenarios and be self-sufficient to be able to deal with it.
Yeah, I mean, I guess that, like, it's pretty obvious to see that this can almost be like a parable for entrepreneurship, right? Like, there's so many lessons probably learned from this, but like, in your day-to-day life, do you like sometimes think back at that and you're like, if I could have done this, I can do anything?
I think definitely. I think this was a big test for me. I'd probably, when I was 17, I had a really big epileptic fit. I had ended up developing epilepsy, and I think I was always going to go and join the army, and was dead keen to join the army, and then so that door closed on me because they don't accept epileptics, quite rightly, because it'd be a dangerous battleground, I'd say. And so then I was kind of figuring out, oh man, what am I going to do? And so I sort of jumped around different degrees, ended up finishing like a law and a business degree, but didn't really know what I was going to do. And then I was doing some kind of like sales jobs and bumping around, like no real proper purpose or anything. And it sort of dawned on me, I was like, man, no one else has rowed the other way. And so I'm going to take on this challenge, and gave myself a sense of purpose. And I feel very lucky that I felt just overwhelmed with vision and purpose for this thing. Like, all I wanted to do was row the Tasman. It was such an awesome feeling that I knew sometimes, like when you just done that, you're building a business, you're like, this is just so cool. This is all I want. This is all we want to do. And we know it's right. You just get that blind focus. It's a wonderful thing. And I kind of hunt for that. But the Tasman was my first taste of that. And so it was awesome. I just decided that, I didn't know what I was going to do, but this was an opportunity to be the first in one direction. So I could throw all my energy at it and start working on it and building it and just dreaming about it and getting up every single day and just throwing hours and hours of time at figuring out how you row the Tasman. So I felt pretty lucky in that regard.
And this was like a multi-year project, right? Like building the boat, raising the money, like actually doing it.
Yeah, like a bit more hardware than software, which I'm used to. But but I think it was about building a team. It was about getting a board of directors or advisors to help me pull it all together. It was about finding the way to do it in the cheapest possible way and bootstrapping the build because I had no money because I was broke. It was then about convincing people that the expedition I was going to embark on was possible. and that it was going to happen, and it was just about working as hard as we can and confidence and belief. So if you start thinking about all those parallels, I really do believe that taking on that challenge and fortunately being successful at it for the first time was a wonderful way to understand about building business sometimes, and
Yeah.
taking risk and balancing that with a good plan to get stuff done.
Sean, I love the inside of your cabin.
Yeah.
This is cool. This is cool. So
Yeah, I lived
like
in there a long time.
I just read, so your dad had 1 day of food left before he landed on shore, right? That was pretty close. And your dad's thing, that sounds like just like complete sort of just like caution to the wind, right? You sound like you actually prepared and like planned stuff and like got ready for it. And you had a lot of technology, but yeah, Rover's Foods had almost gone. That's crazy.
Yeah.
What was your dad's preparation like? I mean, yeah.
Well, yeah, I would say he was a far more able seaman than I was. So if you think, I had never spent a night at sea before I rode the Tasman. So there you
Oh,
go.
wow.
My dad had sailed around the world.
I see.
My dad had served in the Navy for 10 years. He had been on multiple open ocean expeditions. He had sailed around England. He'd done all sorts of things like that. For him, the Tasman was his happy place. He loved it. He was arguably quite an introvert, very capable, skilled, seagoing guy. Could probably live on the ocean for years and be very comfortable in that environment. For me, it was like my worst nightmare, in that, like, I love to talk. I love people. I love being around people. They're a big part of sort of my what I enjoy about life is just meeting and greeting people. So that was a big challenge for me. Like, I generally didn't enjoy being on the Tasman. It was
Hmm.
a mission that I wanted to get done. And he didn't talk. So big differences. I had a satellite phone. I spoke to people every day. I knew where I was down to the centimeter. And I was checking in with people twice a day, part of a safety plan and sort of how we were going to do it. And just trying to build some predictability into the expedition. Whereas he was just gone. So he left from New Zealand. Everyone thought he was dead after 20 days because no one had heard from him. And then, like, on day 63, he crash landed on a beach with 1 day of food left.
Oh,
Like,
wow.
a total adventure. It was like landing on the moon. It's pretty cool. Very cool.
How did he make his own water?
So he carried his own water. He didn't make any of it. So he
Are you
carried
serious?
470 liters of water. So 470 kilos of water he carried.
But like if that had at some point capsized, got pierced, it like leaked out, he was gone, right?
Dumburger. Yeah. Yeah. But like, what's cool, Mark, is like, we wouldn't be allowed to do these kind of adventures these days. Someone would find out and they'd say, that's far too dangerous. Don't do it, right? It's far too reckless, or all that kind of stuff. So it's, there probably was a few quite reckless things about what he was doing. But I still think, like, we've got to hone in on that ambition and risk appetite. We've got to promote it. We've got to push it. It's, I think it's so important if we're going to get great things done. Like, it's got to feel pretty uncomfortable and feel a little bit wild, and that's that's the happy zone. I think that we've all got to get a bit more used to.
So why did you do it? Was it like for you just wanting to do what he did, or was there some other, because it sounds like you didn't actually enjoy the actual experience of it?
Yeah. Look, I've been asked this question heaps of times over the years, and I think it changes as I get older. I think if I try and really dig deep, I did probably want to beat my dad, in some ways. Like, I wanted to be faster than him, prove to him that I could do it, and I could. Yeah, by 9 days, Mark, because I'm a winner. And he said he went the harder way, which I think technically he probably did. So that's all right. That's okay. So, but all he'd just say, he'd just say something like, "Oh, I was the first," or whatever. And so it's all quite cool. But look, I think, there was a big part of me that did want to beat him, and there was a big part of me that wanted to be the first in the other direction, right? I thought so. So I think, if I'm acknowledging that I am a really competitive guy and I like competing, as that was probably one motivator. Another motivator was I was a lost child. I was sitting there going, man, what am I going to do with my life? Like, what am I going to do that's going to what am I going to be proud of? I suppose, and I think I felt that that was something to be proud of and big enough challenge to take on. And so I think a combination of those things, and I think as you get older, you get to recognize your good and bad attributes and emotions. And, I wanted to win. I wanted to beat him. I wanted to be really proud of myself for what I'd achieved. And this felt like a big enough thing to pin my badge to give it a crack.
That's cool. And people these days go in these like meditation retreats, the silent meditation retreats for like 2 weeks at a time or 1 week at a time, and they and just sit there silently reflect. Like, did that feel kind of like that for you? Did you feel like you came out of it a changed person? And if so, how did you?
Remarkably, not at first, not at first at all. I think like it was like an anticlimax. Yeah, I was finished and I was like, oh, it's done now. Like the world hasn't changed, but it's done. And and I guess it's quite a big insight what I've kind of reflected on here, but I gained a level of inner confidence that if I follow a process and stick to that process, and kind of work really hard, that things will happen, um, and having the patience that the things will happen and continuing to sort of work at those. I guess I grew maybe what you'd call a level of confidence in my own ability to execute. And not that I didn't get hundreds of things wrong, but you learn that those hundreds of wrong things are part of eventually getting the right outcome and learning a pattern of success. But it's really hard to learn that without running up to a few brick walls and learning that you got things wrong. So the aha moment was really learning a bit of that, but then also acknowledging that I love the journey as well. That the journey is such a big part of it. And the anticlimax for me was, the journey's done. So the building of the boat, the raising of the money for the campaign, the rowing, the stories, the adventure. The sad part for me is I just learned that I love that struggle. I love that battle. And I don't think I'll ever stop.
How old were you when you did this?
22.
So you got back to New Zealand and then like you probably had like a good night's sleep or whatever. And like, how did you then think about, okay, what am I going to do with this experience? Like what am I going to do next with my life, like after this crazy adventure?
Yeah, it was a bit tricky. So I wrote the book. So that was cool. Like that took me 3 months and it's like 99,000 words or something I wrote. And that was a wonderful way to like close the journey off and kind of move on. So that took me like 3 or 4 months to decompress and to sit back and go, right, what am I going to do now? And when you do something like that, everyone thinks you're going to be this like lifetime adventurer or something. And I was like, rowing the Tasman is not fun. It's shit. Like I don't like put me in a spa. Like let's have some beers. Like I like hot chips, comfortable beds. So,
Right.
so I kind of knew I wasn't a full-time adventurer. Certainly not the actual sort of active adventuring. So my wife and I moved to London for a period of time and just kind of hung out because it'd been like a 3-year campaign to kind of get it all done. And it was obviously pretty high risk and a little bit scary. So I had a few brownie
So you
points.
did it from 19th to 22, sort of this whole,
Yeah,
the whole
pretty
thing.
much.
Wow.
Yeah, or maybe I might have been. Maybe I might have been 23 when I actually did the row, 23 or 24. So I might somewhere around that time. So I moved to London, did a few little speaking gigs and things in London. Just ended up doing all sorts of jobs. I was selling sponsorship on the underground, and I ended up working as a labourer and just doing just traveling and getting over to Europe as much as we could. And we did that for 12 months, and that was just awesome. Then I came back to New Zealand basically because I realized that, I still, probably needed to settle down a little bit more. And, we were getting married in 2012 or something, so a bit of time. And so at that point, needed to get a proper job, as every good married man has to. And one of the companies I got a job with was called Debit Success in New Zealand, Transaction Services Group. And I really feel like I just absolutely struck gold with that particular business. It was a recurring payments company based out of New Zealand. We did gym membership management systems, and they were really ahead of their time, and they were on the very beginning of that whole subscription economy. The whole world of product as a service and everything was just really exciting. And they were the people who converted gym memberships from paying annual to weekly, fortnightly, or monthly, and the system that would integrate with the gym management software. And so I got the awesome job of going around and selling that to all the gyms around New Zealand and Australia. And then we just started going around the world, and we're doing very well and buying different companies. So I got exposure to a lot of MA stuff, a lot of different private equity transactions, and just watching and learning. And I was just a sponge, man. I didn't have any equity. I just was a 7-year sponge of watching these great operators build this company from nothing to be worth billions and billions. And by the end, so I'd started in a little Ford Focus, driving around Northcote and in Auckland. Then ended up living in San Francisco as the VP of growth for North America, and just had a wicked first kind of proper job process, learning to scale multiple country integrations and migrations of data, like moving from on-prem to cloud. So it's just this wicked, like, cool, cutting your teeth kind of adventure. And so I ended up in the Kiwi landing pad in San Francisco just post the America's Cup, and sharing an office with Xero and Vend and all these other awesome New Zealand companies who had sort of cracked it, I suppose. And then I continued to be a sponge, and I was like, what is this whole startup thing? What is this? How do you go and raise capital? What is it all about? And I saw this business model in New York, which was like what ended up being buy now, pay later, but it was for contact lenses. I think maybe it was called Pay It Simple or something like that. It was going crazy in New York. And then I was like, man, actually, I could do this in New Zealand. I could go and start this. And so I started working on an idea, then got really, really excited, and then did what most good entrepreneurs do. You go home, you talk to your wife, you look at your 2 kids and go, well, yeah, I'm going to quit, and I'm going to take this really killer salary and mean lifestyle in California, and we're going to go back to our massive mortgage in New Zealand, and we're going to get a bigger mortgage, and we're going to do a startup. So that was kind of that's where I started.
So you guys were living in San Francisco with your wife and kids?
Yeah, we loved it. It was awesome.
And did you always want to go back to New Zealand, or was it purely because of the business that you wanted to build?
I think a big part of my decision-making framework is building a startup has to be sustainable, and your circle of life, whether it's in everyone you support and everything, is part of that combination of things that need to work, right? And so you need a stable home. Happy family means you can be a better operator. And so I couldn't see a path without raising a ton of capital, and I was too new. I couldn't do that yet. Didn't have the skills yet in San Francisco to pull it off. Maybe, in hindsight, it's always wonderful. Of course, I should have tried to do it there or something, but I didn't feel I had the confidence or network to do it there. So move home, then my wife was better supported. We had bought a house like in 2009, I think, or something like that. So we had a stable footing there where they could do that, and I could go and take some more risks and take some bigger adventures. And I think it is something to consider as you're doing startups later on. Is there's a whole lot of different things that need to add up, and it's not just business success. It's your ability to endure like the 300 uppercuts you're going to get along the way. And so building a business in New Zealand was where I knew we could probably absorb more uppercuts than if we were in the States.
Yeah. And you started in 2016, right? I guess I was still kind of very early in the New Zealand startup scene. What was that like, going from like San Francisco, where it's all happening, to, I guess, home where there's only probably a handful of funds and not that many other people who do the same thing?
I don't even know if there was a handful of funds then. I feel really lucky. I feel like I've ridden this VC roller coaster in the New Zealand market. I think we moved home in 2015, and like you started seeing these things called accelerators and, like angel HQs and all these different things popping up around the place. And like, what is this whole thing? And so we started just sort of knocking on the different doors and pitching to these different really new ecosystem providers, and valuations were just like so awful. And the naivety of the ingredients to make a successful startup was still so vague, right? So a low valuation meant, an angel was getting a great deal, but didn't mean it was set up for success in any way. You saw so many terrible things going on, and I don't think it was because of terrible angels or anything like that. There was just all new stuff, new deals, all exciting and things. And so came back 2015, and then joined an accelerator fund called the Flux Accelerator. It was an ice house product where there was like 8 companies in there, and like I did a deal for like 50 grand on a 500 pre or something like that, like something ridiculous. And but I'm
it's a good
grateful.
deal.
Yeah, well, those deals don't exist anymore,
Perfect.
Mark. So don't worry about it. They're gone.
Shaun, if you got any more deals like that, let us know. We'll do that all day long.
Yeah, I totally. Yeah, right. So it was but you're starting, right? So like for me, there's not one part of me that regrets that deal or anything. I just think you've got to go forward. You do a deal, you've got to own it, and it's 2015 was a different time. You didn't have the competitive attention to drive the valuation higher, so it was the market in many ways. So you take that deal, and I think we did more damage with that 50 grand than many companies do with 1.5 to 2 million, because we were hungry, man. We just wanted to win. So I think there's lessons both ways. Yeah, that was my first sort of dip in my toe into the startup world.
Nice. And that was a kind of good success for you, right? Like it got acquired 4 years in?
Yeah, I think it was a wonderful lesson in market dynamics and speed and timing, and all these other different ingredients that come together to mean you can exit or can't exit or are successful or not. And so we did that 50 round, and then we went and raised another mil. And what was exciting, I suppose, is have you read the book Blue Ocean, Red Ocean? I'm sure, that's like a real 101 kind of strategy book that if you're trying to create a category and you're the first and you've got this blue ocean, and then all of a sudden there's 10 competitors, so the ocean's red, it's done. You got to get out. There's differentiations almost non-existent. Price competition becomes, the thing that's going to strangle you, and so you're kind of out. And Buy Now, Pay Later was just this beautiful lesson in Blue Ocean, Red Ocean, that Afterpay and Zip, they were the category kings. They had momentum. We felt that we could go fast enough to win New Zealand or get a really good, be one of the top two in New Zealand. And kind of that was probably where my ambition tapped out on what I thought it could be. I just knew we could be first enough here that, I was hoping that Afterpay or Zip would take us out in an acquisition, not in terms of standing on our throat. And so what we realized is that all the Buy Now, Pay Later funds were chasing retail e-commerce really, really hard. That was where you're getting the customers. That's where the network effects was flowing. No one was going after services. And so it's not the smartest idea, but it kind of worked, where we went, right, let's go after dentists, vets, hair and beauty, and automotive. And so we felt there was still a transactional need there for Buy Now, Pay Later. There would still be an element of utility. Transactions weren't as fast moving, but there was loyalty within the customer base. And so 2016, I ran around New Zealand and just signed up as many of those as I possibly could, and ended up getting around 5,000 different merchants, individual merchants, onto the platform, which equated to around about 80 or 90,000 users, so who were transacting. So that was really valuable in that we were able to, because the nature of the transaction is different at point of sale than it is in an e-commerce environment. So we had quite a sticky solution there, and the merchants loved us. So we'd created a moat. And by the end of that period, there was like 22 other Buy Now, Pay Later businesses that had started across Australia and New Zealand. We were seeing this going, we're done. Like, this is not, how are we going to win this? Like, ridiculous. But because we had signed a lot of these merchants on sort of 4 to 5 year contracts, people couldn't get in. And so we'd created value, we'd created a moat. We were the only Buy Now, Pay Later that really mastered the services sale. So that made it a really good channel for financial products like personal loans, credit cards, everything like that, because we had the services space. We became quite an acquisition target for a lot of the large finance companies across Australia and New Zealand. We got a few early stage customers in Australia, and then it was very obvious we would never win category wise. We would never be able to beat Afterpay. We needed to go and raise 200 million to have some success there, or partner with a monster that could fund the growth. And so Latitude Financial Services sort of came knocking on the door, which was Australia's largest second tier finance company, and said, look, we think you're going to give us a really good running start to entering Buy Now, Pay Later. And we sat back and as a board and went, are we actually going to go and raise $50-60 million now? Or are we going to go, well, this is still almost a 10 to 12x in a 4-year period. That's a good outcome. Let's pull the trigger. It's a different type of exit. I think we did the right thing. Hindsight, if we'd hung on a year, maybe we would have made more. But bird in the hand, it's one of those things.
How big was that exit?
So we ended up selling basically for 7 mil, and then we got a 7. We got that again in an earn out as well. So So look, wasn't, on the grand scheme of things, but in terms of time and energy and optionality, if we hadn't have exited, were all combinations that added to that decision. So I think good decision.
Yeah, makes sense. And did you have a lot of investors? You said you raised 50K. Did you raise anything else besides that? Were there any other investors that you had kind of beyond that, or that was
So we did another round of a mil after that 50, and so obviously the 50 on 500, those people were happy, and then I had a whole lot of friends and family that came into the $1 million round. So we had about 32 other investors that they were pumped, and they could see you could see the world had shifted, right? They could see every newspaper article was like, Afterpay trading at 90 times revenue on the ASX. That's they were monstering ahead. They were so inspiring. And I guess what I learned as well is, they built the market for us too. They built that opportunity. And that's been a lesson for me with other startups sort of building categories, that once competition comes in, it's not, it's a lot of the time it's validation. It's not, not that you need to be too worried. In fact, it's a massive compliment. You've got 2 or 3 people paying to build that market now, which can be really helpful.
Now, when you were thinking about the acquisition, I mean, you were in your 30s. Were you thinking as well, like, okay, like this opportunity, we might like reach the end of the road here, but I'm still so young, I can kind of use that and build the new thing. Were you already thinking about that? Or
totally? Yeah, I was. I think I'm pretty practical and relatively unemotional about these kinds of things. You look at the probability, the various probabilities at play in that particular transaction, 22 competitors. All that was going to happen is price competition, highly undifferentiated product. So much margin was dependent on capital markets in terms of what you could go and borrow money for, to lend money. So there was so many massive variables which could either hyperinflate that value or just kill the business entirely. And maybe if you've tracked it, you would have seen that out of those 22 that were kind of around, there might be 3 left now. And they're all trading at significantly less than their peak valuation, and is probably questionable whether some of them should be trading at all. So it was an interesting time. And yet I was weighing up, literally that book, Blue Ocean, Red Ocean. I was like, this is going to turn into a bloodbath. So get out with something. Do the right thing by your shareholders. If you've lost confidence as the founder in some ways, then you can give them all a pretty good return on a pretty short time span, and swing the bat again. So I think that for me it was actually quite an easy decision.
Yeah, makes sense. And then you had your earnout period for a few years. And did you already kind of start thinking about what you were going to do next once you get out of that business?
Well, the fun thing is, an entrepreneur, once you've sold something, it takes about 3 seconds to start coming up with new ideas, I think. So yeah, man, I had basically a 2.5-year earnout, which I found very hard. I think I just felt like I was missing opportunities all over the place as the world was moving. And I think that's probably quite a common thing, that once you've been an operator, you don't want to move at the pace of your acquirer on any opportunity, and you're forced to. So it's, you do your time, and you get paid really well for it. And, I got to spend some wonderful time with my kids and just chill a little bit, which was pretty epic. And so, I came up with about 50 different ideas during that time. And then you've got to
50
probably 50. Yeah, like every day, and then you've got to get very disciplined around what am I going to take forward, because you become good at taking ideas forward, and you become good at executing, and so then you've just got to be disciplined enough to effectively invest the time to round out a thesis. And so for me, I spent a lot of time reading, researching, and man, if we had a bit more AI back then, it would be quite different. But hopefully this process is accelerated quite a lot now. Yeah, we just read and researched, and it was during COVID as well. So I was just digging into everything I could to figure out, well, where are the patterns? Where are some repeatable things that we could do? What's my domain expertise? And came up with a bit of a decision-making framework around, if I was to embark on a particular area, what's gonna improved the likelihood of success for me. And I knew payments really well. I knew I had a team for that. I kind of knew B2B2C in many ways. And so I kind of just started looking around those particular spaces, and then fell in love with insurance, believe it or not. Out of all the startups in the world, of all the fun sectors you could do, I landed with insurance. So yeah.
How did you? So what made insurance interesting for you? How did you fall in love with insurance? Seems like a very strange thing to say.
Well, I know. It's embarrassing. In fact, Mark, it's embarrassing, and it kills dinner parties. So for me, look, insurance, and my passion for it has gotten worse and worse, like better and better. In fact, like it's deeper and deeper. So you go, one, it's one of the biggest markets in the world, right? It underwrites everything that we do pretty much. So families, homes, businesses, health, life, everything. So it is critical for all of our countries we live in, the economic infrastructure. So one, it's really important sector. Two, it is hugely slow moving, and like it moves at glacial speed. And so that made me really, really curious. And I think that is a consequence of the way mergers and acquisitions have happened over the years. These businesses have gotten bigger and bigger. And when businesses get bigger and bigger, they form these huge profit pools. And then the motivation internally from the executive teams or whatever it might be is to protect those profit pools, not to rock the boat and not to innovate. And so for me, that was very similar to retail finance leading up to the buy now, pay later phase booming. I thought conditions were similar, and there were conditions of change present across multiple markets where insurance was going to need to evolve and adapt, and customer expectations were going to exceed the ability for an insurance company to deliver on those. Exactly how this was going to manifest, I wasn't sure, but I could see that there were similar patterns in those in that industry where the sector was not going to disappear. It was still a vital service or product. Expectations had changed, but industry back office could not deliver to those expectations. And so I felt that the conditions for disruptive or innovative solutions would be there, and exactly what they were, we just needed to start exploring.
So basically, the essence of what you're saying is, if I understood correctly, insurance is a big market. It underpins a lot of our infrastructure and how we live life. And most companies, when they get to a certain scale and they get to a lucrative kind of like spot in the market, they make a lot of profit, high margin, and they just have no ability or reason to innovate. And so you thought there was opportunity to basically kind of disrupt them. Is that kind of
Correct.
the right sort of, okay.
Absolutely. That's, that was, I guess, the going in position to go, well, should we start going a little bit deeper, and start basically looking under the different rocks to understand it more. And look, it is a complex sector, and it's complex for a reason. And there are a lot of really smart people in the sector doing a lot of really smart things. I think it's just so much of the core infrastructure is so old. And I suppose what I underestimated is the complexity of that infrastructure, and the ability to be able to execute on recreating some of it in a way that was modern and intuitive. One of these things, you go into a big old enterprise, and it's actually not hard to just build a slightly faster horse in terms of a technology solution. But that's not our ambition. Our ambition is how do we build something so revolutionary that you may not need anyone inside of an insurance company ever again to run it, right? Because or significantly less. Like the role of AI and serving far more people around the world is sort of our ambition. And then how do we deliver that and get these massive monolithic insurance companies over the line so they can ultimately reduce the cost of delivery, reduce the cost of insurance, stabilize the world so more people are insured. It's a cool mission that we're beginning to get super excited about.
So what were the first kind of products you thought about to fulfill that mission and to make that happen?
So we had our expertise around payments. We really felt that that's what we could deliver. We picked payments because we felt it was a really good wedge into insurance companies. It put us in between the customer and the old platform. And so we could get the customer being the policyholder. So we could provide the policyholder with an amazing modern experience we could use the outputs of the old technology to create that modern digital experience. And so we could help the insurer meet the needs both from a regulator in terms of how they needed to communicate with customers, as well as reduce operational costs because the customer could self-serve. And we could do that in a way which would create a good customer experience, a reporting layer which would be able to talk to the older technology and pull and push information from it. And so we use payments as the wedge for that initial beginning piece of transformation. Through our buy now, pay later business, we knew that we'd scaled that up to 1.6 million customers, all doing transactions at super fast rates, and self-service was something we could do all day, every day in a secure way. And we could show insurers the light in terms of where that would help their business and reduce operational costs, make happier customers. And so that was the first thing we built, was this insurance premium management module to be able to plug into the different insurers and help them on their journey. And that seems to have worked really well.
And what's so I guess when you get started and you try to work with these really old, really big organizations, how do you start, right? I mean, there's like different ways into these organizations, right? They have all these kind of innovation programs, and you might be able to kind of speak to some of the C-level. What was your kind of way in to get started on that journey?
I think this is an evolving thing. Like we still learn all the time as well about and what I think you're referring to is kind of enterprise infiltration.
Yeah.
And enterprise sales, right? Like there is it's a dark art of trickiness. And it's a massive combination of just being part of their consideration set, making sure that the stories you're telling in public are solving the problems that they have. And it takes you a while to figure that out. And then making sure, as you're finding those particular people, whether they be at C-suite or GM level, that you're connecting with them as much as possible. So I think over a good year and a half, we were just trying to figure out who to talk to in some of these organizations and exactly who they were, and then figuring out how do they make decisions and what's the time frame for making decisions. Things like what are their budget cycles, who are the key decision makers in those first meetings, going, well, what and how do you make decisions? And what we've learned is when engaging with the enterprise, that a lot of them will just talk about that out loud really well. And it's important to understand, because you can be talking to the person who has a delegated authority of $12, right? They can buy coffees and that's it. And you spend months and months talking to this person, and then you realize that. So we're getting way better now at walking in and kind of going, well, these are the problems we do. We solve. They're not small problems. Like, they're a big part of your business. So are you the right person? If you're not, that's cool. We can have a beer or a coffee, but can you tell us who the right person is? And then working them through a very structured program. So without dressing it up, so everyone knows, like, yes, we're going to ask you for money to do some work. And the sooner you can ask them for money, the quicker you get to the outcome. Of are they actually to change? Do they have the decision-making power? Have we sold well enough for them to change? But Hendrik, it's just not simple. Like, every big organization has a different matrix of spider webs that make it up. And a big part of my job is figuring that out with every single one of our prospects as we work them through a sort of a process of, one, can we solve the problems they've got? Is the person I'm talking to the person that wants to solve those problems and empowered to solve those problems? And if they're not, you know to only spend a little bit of energy on them.
Yeah, makes sense. And where are you with Simfuni now, and what's kind of in the cards for the next years? I mean, we mentioned earlier you just raised around, I think, this month.
Yeah.
What do the next 2 or 3 years look like?
Look, so Simfuni is a full end-to-end operating platform for life insurers. We started off our journey looking at customers first, so looking at what would a modern policyholder expect from a life insurer. We gave them that experience and starting with payments and self-service. And then we started thinking through, well, we've given the customer that problem. What does the modern operator want to be able to do? What does the modern administrator in a life insurance company want to be able to deliver to their customers? And so the problem that Simfuni solves is that life insurance, of which there's $4.7 trillion sold every year around the world, the average age of their policy administration system is about 28 years old. So 28-year-old software does not and cannot deliver automation. It cannot deliver modern customer experiences. The operational cost of that is exponential due to the manual processes that it requires administrators and operators to be able to do. So Simfuni is attacking both the operator and administrator experience and life insurance sector and delivering the best customer experience. And so we deliver that by moving policy administration information and data onto the Simfuni platform, introducing multi-layers of AI and automation to the standard processes that they've been held up with by this old school tech, and provide a single 360 view of customer for those operators and businesses. So we're modernizing the life insurance technology stack over a period of time, which is super exciting.
AI didn't exist when you started, right? So how have you like evolved your product thinking to include it, and what parts do you use AI in?
Yeah, cool, man. Great question as well. The most exciting part for us is we are the system of record. We are the most important cog in the wheel, in that we have the premium payment data and we have the customer. And so when we get the premium payment data, that's because it's been calculated on different underwriting rules. And so those underwriting rules and the policy rules dictate the entire relationship between what the customer can do, can't do, and what the system needs to do to calculate. So we have all the policy information, we have all the customer information. And so with all that data running through the system every single day, we're able to deploy AI agents onto the most common questions that come in from a customer. An example would be, I would like to move my payment from a Monday to a Thursday. That needs to be allowed in the policy rules. And so the AI agent can do that just through simple chat and go, yes, absolutely, that's totally fine, done, and enact that, recreate a new batch payment file, and continue that customer journey. An example of where that created problems before is that would have required a phone call, an email, and a letter from a life insurer previously, whereas now that's done in real time. And so that's one example. Another example would be, I'm moving house to this area, and then when they move house to that particular area, that may impact the calculation of the premium. And so we're able to be able to do that with the AI agent reading the policy, applying the change, making the offer, recreating the documentation which locks that offer in, sending that in an email, and then straight away, that's a process which would have taken 3 people 2 weeks. And so just some really, what I think is so cool and so normal, where AI is just going to absolutely like speed up time to serve and everything. It's pretty exciting.
And Shaun, just maybe like to just maybe go back a little bit, like for people who don't really know maybe exactly the details of insurance, how it works. So insurance fundamentally is just like, for life insurance specifically, that's like you get it so that if you die, your loved ones get a payout, right? That's what it is. And you kind of pay every single month or something, a premium, and then your premium is based on like your risk factors of dying, basically, right? Is that sort of the right way to think about it?
Yeah, man. That's right. And life insurance is really interesting. Around the world, life insurance pays out like 99.9% of the time. So it's a wonderful insurance in that regard. And you pay an amount of money to a life insurance company. That amount of money is called the premium. And the premium is an annual amount that gets calculated to basically, when you die, through all the various different ways people die, you or your next of kin or your kids or your wife or your husband, whatever it might be, will get a claim settlement, which would be based on the contract, which is the policy that you've established with the insurer. And so that's one form of life insurance. There are all sorts of other categories of life insurance. You've got life, trauma, funeral cover, all these different other things. And in all different markets, there will be different types of policies that cover different events for you. In South Africa, there's a big one, which is children's education. So if you die, they'll cover your children's education and their healthcare till they're 20. So all these different other things, which an insurance company will charge you as a consumer to cover a risk, basically, as one way to do it in your life if you pass away. So it's a really important sort of aspect of society. And the part that a lot of people don't get to see is like that moment where, you know, a significant other has died, a husband or a wife, and they're sitting there with 2, 3 kids just going, holy shit, what am I going to do? And then they get a phone call saying, here's $1 million. Yeah, you know, we're not going to take away the pain, but your outcomes and your children's outcomes are materially different now. So that part of the industry I love, I endorse. I think it's awesome, and it's really critical. But you don't talk about those stories all that often.
Right. And is the industry like very, like I assume your risk of dying, like what are the actual like factors that go into like assessing your risk of dying and your premium? Is it just age or is it other things as well?
Yeah, well, this is like, I guess the other side of the industry as well is that they are very clever at figuring out who's going to die and who's not, right? And I guess this is the bit that some people, that how smart they are in understanding all these things is I find it fascinating. And I think the more this data gets shared, is actually it's all the real data, right? So if you know all these different things, all these factors and conditions which mean you're going to die, you want to know about it, right? And like what I find interesting is how much of the world insurance companies actually drive, like where you can build houses, like all these different types of things. But for life insurance, when you're applying for it, you go through what's called an underwriting process, and that underwriting process, depending on your age, your sex, your weight, your height, all these different things go into these large underwriting processes where they've got really smart people, and they're called actuaries and actuarial scientists who are just total data geeks, very clever people who go through all the various different variables to come up with a risk-based calculation on your likelihood of dying and the variables that may occur in the lifespan and like your lifetime value as a potential life insurance customer. And the thing is, we want good, smart life insurers that remain very, very liquid, and are making more money than they're paying out. And so they remain stable, but they do pay out a huge, huge amount of money all the time. So the margins aren't nearly as big as everyone thinks. And when there's a lack of events, then everyone sees the profits printed on the newspaper and stuff. But when you have huge global events which occur, floods, earthquakes, tsunamis, you forget that they get totally wiped out and they're going to their reinsurer, and just to make sure that they can start again. So it's a great industry, but it is rock and roll.
What was the biggest kind of number one factor that determines your premium? Is it just your age?
I would say there are a lot. I think there's always a lot.
But like the one that has the highest
condition,
weight, obviously, like if you were to rank them.
Yeah, like I'd say from like a clean skin application, from my knowledge, and every insurance company is different, I'd say BMI over indexes on a premium, I think, from time to time. But pre-existing conditions is the biggest one, right? Like, so if you've got BMI and type 2 diabetes, or like you've had massive history of cardiac, or your parents have had cancer. There's all these different things which come into the calculation, and frankly, they increase you as a risk. But what the insurance company has a right to do is to say, well, look, we're not going to cover you for that, and then that will bring your premiums down again. So I think I think a lot of people don't like the confrontational the confronting nature of these type of questions, and so insurers get a bad rap. But I think that as people, it's good to front into a lot of those different conversations so you understand your risk exposure as a health concern.
Yeah, totally interesting. Okay. And what are the margins on the insurance business? Like, what are their typical margins, kind of on like a good year, regular year?
I actually don't know accurately, I think, and they are quite varied depending on events. Like insurance in New Zealand at the moment is having a relatively good year, a general insurance.
Mm-hmm.
We haven't had we haven't had a super major event. We had lots of events, but we haven't had a big, we haven't had a Kaikoura or an Auckland flood or something like that. And then Australia's having a slightly worse time because you've had some massive flooding issues there, which has been full on. The US, we haven't had too many of those bushfires, or the California bushfires. I'm sure there's been a few, but they haven't been too bad. And so all of these big events around the world dictate reinsurance rate, and a reinsurer is the company that insures the insurer. And so when there's huge global events, the reinsurance rates go up because they've got to recapitalize and do different things, and so there's a flow down effect of that to everyone else, and then the risk appetite goes up, so premiums go up. So all of these different things. So I think margin can really move anywhere from 40 to negative, depending on the event that's sort of running in the world.
Interesting. And on the actuarial side of it, like you said, there's people who are doing it. Like, isn't that just like simple formulas that like I don't know, like, and is that kind of what your software aims to do? Like, are you looking to sort of help them improve prediction rates on what the premium should be, or are you doing more of the like just operationally like managing a customer's like premiums and plan, et cetera?
We won't do any of the actuarial science. We would integrate with some amazing, really clever companies that do that. And we would look to integrate with those sort of the actuarial tables, the underwriting workbenches around the world, because they are vastly complex and they're a dark art to the, well, a very amazing art in their own sense. They are big, big systems, really complex, hugely expensive. Yeah, and I think AI is taking that whole world up incredibly as well. But the variables that come into it, look, I think AI will definitely make actuarial science, I guess, more accessible and the outputs of it. So you won't need to pay 10 sort of Oxford doctorates to start doing math for you to understand how your insurance company is going to perform or not. I think we'd be able to get that out of some amazing AI tools at a point in time. I don't know where they are just yet, but their actuaries are very clever in that they're also going through and balancing out, well, how much capital reserves do you need? How does that work on the fund performance? How many of these people can't we underwrite? It's a lot of stuff that I'm not qualified to talk about, but it's definitely tools we would integrate with. We wouldn't build out the actuarial stuff, but that'd be in our underwriting decisioning engine.
Yeah, but that's actually really interesting. Do you think that like with AI in let's say 5 years or 10 years, it'll benefit both the policyholder and the insurance companies because you can basically price premiums much better, right? If you get that better.
Absolutely. Like I'm 100% convinced. I don't know why. Like I think you could have a million policyholder insurance company and have 10 people running it. Like I don't see a world where that we don't need, I just think we totally can. I think, I think distribution may be a little bit different because life insurance is complex and you do need conversations. And so I think life insurance will be sold by people and sat down with people. I think there'll be better underwriting, direct underwriting, and there'll be people who are, there'll be AI machines and everything like that are asking and helping those financial advisors and brokers sell it. But I think once it comes into the world of operating an insurance company, I just think, well, I know that Simfuni will be performing so many parts of that through automation and reporting and everything that it's super exciting.
Shaun, did you initially start the company with the intention of being kind of a more modern way of operating an insurance company, or did that come about after you saw what AI could do and what you could build kind of an automation side?
Well, absolutely not. We did not start with that. So we totally started with that payments thesis that we could build a premium payment operating solution, which would just collect more premiums, retain more customers, and reduce time to serve. And we put that in a box, and we thought that would be an incredible business. What we didn't quite realize is that we needed to move further up the value chain into that policy administration to be able to have access to the data required to deliver that awesome customer experience. And so as soon as we realized we had to move up the value chain a little bit in terms of the calculations and the decisioning, that really meant we had to sit down and go, well, where do we want to be now when we grow up? What do we want to do? Our client base at the time was predominantly life insurers. So we just basically the combination of us moving up the value chain in terms of functionality, our client base, our ability to get feedback from that client base to evolve the product, help set that direction. And our customers helped us pay for that moving forward. And then as AI developed, it just made total sense that we use AI first principles in terms of the operating platform and what needed to be present. So yeah, as you know, you pivot and you learn and you evolve to meet the market and get ahead of the market. And I think that's what we've done.
Are you still doing payments as well? Or you're now
Yes.
kind of, okay, so you're doing kind of, so what your offer to like an insurance company is like, you do the actuarial stuff, we'll handle everything else from payments to administration to customer support to like,
Correct.
and what is and they save costs or they can hire fewer people? What's the impact to them? Is it like just?
Yeah. So our economic value is initially when we go out, it is absolutely the automation of the most common customer inquiries. So change my payment date, cancel my policy, renew, receive documents. So we automate all of that. The sort of the time to wow for an insurance company is once they've turned Simfuni on, 80 to 90% of the normal customer inquiries that are either coming through via email or telephone are done on the Simfuni self-service portal. And so that's an amazing outcome because typically, depending on the size of the book, we know for 10,000 policyholders that typically will reduce sort of headcount by 7 or 8 FTEs, which or repurpose those FTEs to more value-add tasks like processing claims, which is really exciting. And so in terms of efficiency for the customer, we know that part happens. As that part's happening, the operational side of the business as well, as people are getting through so much more important work like the processing claims. And so when they're trying to calculate what are we worth, it's a combination of efficiency, it's a combination of if we're deploying more people onto more high-end tasks. But then there's a cost which they can't really measure as well, which is that we make them so compliant and basically through all the audit trails and making sure that our automated digital processes are meeting all of their localized regulatory functions and requirements. It just means that they're not having people having to pull together hundreds of different files to give to a regulator to show that they're doing things in the right way. We can show them in a really good way. So yeah, like there's lots of other areas where people are finding value in what we're doing, but that would initially be one of the big ones.
So interesting. So like and I guess when we initially invested early on, like you had like a vision around, I think payments or something, right? But yeah, like this is awesome. Like I think moving into this, automating a lot of the customer support, a lot of the operational work, both fits the kind of the broader trend of technology, but also I think sounds like it's something that these companies need and they can get more efficient by using
Totally. It's the most exciting time, Mac. Like I think people are looking at us as going, actually, that's where we need to be in 5 years. How do we get there? We've got 3 million customers at the moment. They only can call us to move a payment. And then when that happens, we need that to be recorded in the operating platform. And we need to see the 360-degree view of that customer, what policies they've got, what conversations they've had, why they wanted to cancel or not cancel, what's their NPS, how do we red flag that NPS so we know how to love them more. Like it's real CRM plus insurance distribution and management. It's
so
like we're really
it's really
excited.
hard for them to rip you out, right? Like it's impossible for them to rip you out.
Yeah, I think so, but they need to kind of rip us in though as well. Like it's sort of they don't have this, so
That's the biggest challenge.
Yeah, like they don't have it. And so like literally we're at a meeting this week. There's a large Australian insurer, they've got 2.5 million customers and they've got 17 different systems and there isn't a connecting CRM layer for those customers, right? So you've got your operating staff learning 14 different systems and then you've got to have a CRM layer which will all put in there. So when someone calls, they're like, well, hold on, do you know what system you're on? Of course they don't know, right? Like they've got no idea. And then the operators then they go, well, I don't really know how to help you. I'll talk to you in 3 months once I've figured out how to deal with your inquiry. So it's an exciting time.
How many customers do you have now?
At the moment, we've got 8 life insurance companies on the platform.
Wow. And you're focusing just on Australia and New Zealand, or are you thinking global?
Yeah, just Australia and New Zealand at the moment. We have 2 pretty early inquiries from South Africa currently, which is really interesting because that market's super exciting for us. Time zone to manage is not so exciting. It's like the worst time zone to manage. But in terms of size of the market, the maturity of life insurance and the variety of different products they've got in South Africa, it's like much lower value products, which is quite attractive to us. It's quite cool.
Maybe to wrap up, we talked a little bit about what's in the cards for you and the exciting mission that you're going to work on to innovate in the insurance industry. Where do you want to be in like 5 years if everything goes well, if everything goes to plan? What's the future for Simfuni?
Look, I think we're incredibly excited about the impact we can make across the world in the life insurance sector. We have a great team now. We've hired, I believe, some of the best life insurance technologists across Australia and New Zealand that are approaching building the product now with what does the world need from a life insurance management platform in 5 years' time, and we're building towards that. And I think that's why we're getting the conversations with the largest life insurers in the world because they know they need to get there, and they know at some point they're going to need to turn off these massive monolithic things. And the way that we're building technology, the lack of competition in and around people who are thinking like us about thinking right has to be fully API first, fully AI first. In terms of principles, is going to set us up really well for winning what we believe some of the biggest life insurance opportunities there are around the world. Life insurance isn't disappearing, it's growing. We're going to be improving access to it. So, look, we would love to see us as one of the leading life insurance platforms in the world. And we think to get there, it's going to be between 5 to 10 years. But that's an exciting journey we're signing up to. We're falling in love with the sector more and more. And man, we just hope we can make it happen.
Shaun, one quick question, maybe like it's a little bit sort of further afield, but like, now you can get much better health data, and you can get just much better data in general, but you can have wearables, you can have fitness trackers, do monitoring of different, like every aspect of your life, your exercise, your sleep, what you eat. Like, doesn't that give you, and like this is like this ever present question, right? Of people being worried about giving insurance companies their data. Because like the insurance company would basically like price you in correctly, and then like, yes, there's this sort of asymmetry of information where like maybe something about yourself, they don't. They have to look at you as just like a standard like 42-year-old male versus maybe like, oh, I actually have this like precondition or something. What do you think about that, and like how does that, because that does like, I always kind of think about there is some antagonism there between like, and that's, I think, generally why people are so worried about data privacy. Like when anyone brings up data privacy, a lot of the time it's literally because of insurance, right? Like that's like usually the first thing they say, oh, well, like if my insurance knows like all this data, like that I have on my like fitness tracker or from my sleep data or whatever, right? Or my blood test results, or like that's always the first thing is like, we don't want insurance to know because then they're going to like raise our premiums. How do you think about that? You being in the insurance industry, like where do you think this is going? Will there at some point be like just an automated, I don't know, system that just takes in all of your, because on the flip side, like if you have really good markers and you want to go and tell the insurance company, look, I'm actually like, I actually rode the Tasman every single year. Like I'm actually in great health. My premium should be much, much lower than everyone else. So it goes both ways, I guess. And so how do you think about that? As we get more data, insurers can become more precise. Some people are hesitant. Some people like actually would want that data to be taken into account. Yeah, I'm just curious, like, what do you think about that?
It is a fascinating ethical debate, I think, and it flips around, right? Like if I'm the healthiest, least stressed person with no family history, I like want to be paying $12 a year for life insurance, as opposed to the type 2 diabetic drinks 20 beers a day and eats pies and hot chips for lunch, right? And so it's how do we manage that? And then it goes in even deeper with genetic testing as well and genetic marker testing. If I get genetically tested when I'm 18 and I show a predisposition to 14 different things, should that be used in my underwriting? And I've actually seen a case study where they have underwritten different people and then done the genetic testing over a sample set of like 100 to see who would be covered, who wouldn't be covered. And it was remarkably like everyone was pretty much still covered, even as a result of, based on this one analytics. But that would change, right, over a period of time. And I think the average consumer just wants to win over the insurance company. And so this is giving them what they think, I think, is better data to not win, like just to pay them forever, whereas everyone likes to get a payout or whatever it might be from time to time. So I think the data is really, really useful. I think the way it's used in underwriting, I think it's going to result in less profitability probably, or more profitability for an insurance company if they have more information. They will still have to underwrite people because the tension is if they don't underwrite people, the brokers and the IFAs won't sell their products. And so that their ability to grow, they will still have to underwrite. And so there's some natural tension there where they will need to take risk depending on whatever information they do have or don't have, but they'll still need to take it. And there'll be that balance of them balancing their risk with the information they've had. Bill just being passed as well that they're not allowed to use genetic testing in underwriting and insurance. I think that might have gone through or just going through. So, but it is... It's fascinating in New Zealand, yeah. It's fascinating. It is really interesting because we've explored integrating with Garmin as well, going, well, if I'm doing like 15,000 steps a day, like I just like at least build up that discount for me every month or whatever it might be. Or, if I've got my Aura ring, then you can tell I'm sleeping 8 hours.
Yeah. Yeah. I guess what I'm sort of getting to is like this whole idea of insurance, right? I think it came from like actuarial tables, right? Like initially, and some guy like back in, I think it was in England, right? Like I remember listening to some history, like some guy was like, oh, you can actually predict based on like, certain things, who was dying when. And like it's all very probabilistic, but like when you get to a point where you actually have all the data that you could ever want about a person, and you could get very, very precise. So like I know exactly how long like Sean's like, like how much mileage he'll get out of his body. Like then doesn't the probabilistic piece sort of go away in some ways where like if you know exactly who, like you can sort of like say, okay, well, like, and in some ways, like, doesn't it also mean, yeah, I just don't know like what the implications of that are. Like when you go from like, oh, I'm just insuring a broad population where I can generally tell like what the distribution looks like to like, oh, I know exactly what each person, like I know the exact, like within a certain kind of like margin of error, obviously someone can get hit by a bus, but within a certain margin of error, I can tell how long like this person will be around for. Yeah. Does that change things
Well, I
for the
think
industry?
so. I mean, and it's really how detailed you want to get, right? Because I'm sure there's some maths which you just go off the average age of a population in New Zealand, and you go, right, well, let's just underwrite everyone, and we'll do all of our maths based on payouts and size of the normal New Zealand male dying at 74, whatever it might be, and so we'll do a really quick underwriting 10 questions, and we'll just, you know, take a swing of the bat. And there are people that do that on similar type of products like funeral cover and different things like that. But I think the more science involved, I think will hopefully benefit the people who are looking after their bodies, who are, looking after themselves a little bit better. And so that and hopefully that pricing will drive better people behavior to be healthier. And a lot of the insurance companies can invest in educating to say, well, if you do walk 10,000 steps a day, if you stop eating so much and get your BMI down a little bit, then we're excited to extend the discount to you. But who knows, man? There are a lot of really smart people working on all this all the time. So it's a really interesting sector.
I think like ultimately you just get a more perfect market, right? With more perfectly priced premiums, because you're taking away the asymmetry in information. You can exactly say, this is your risk. We know exactly this is your risk. So you won't be paying too much or too little as a consumer. And likewise, you won't make excess profits or lose money on the insurance side. Right? I think that's probably
but I think like
going.
what you can also get is just like me, you, and Sean are like, oh, we're all like, in the top. We can all look at our data. We can say we're in the top 10% of like, I don't know, fitness folks in a country or the world, whatever. And we can like literally just make an insurance company just for like the top 10%, right? And then actually that skews the pool of everybody else. So like people want to serve us. Other like you sort of like don't want to serve the lower half of the market.
I guess the question is like, I guess the moral question is like, what do you do with the folks that have such a high risk that they're uninsurable by the free market, right? And then this question whether you have to regulate that.
Yeah.
And how.
Yeah.
That's it. And there are people that only serve the top end of the market. That you can, as an insurance company, I can choose what risks I want, right? And what I want to do. And so I can write a policy for the most premium of premium customer that only meets these certain conditions. And that's the really interesting and exciting part about it, is when they talk about building product, is who they're targeting and what they're targeting, and understanding it all. And you've got different markets for different types of people. And it's all, it's fascinating.
Yeah, and I mean, it's in similar ways to like, I guess, mail or like utility company, right? For them, like economically, it doesn't make sense to cover the most rural regions, but they have to because the government says so, right? So I guess that's already happening in the insurance industry, and will probably happen even more.
One last question. Given what you've kind of experienced and, the experience you had crossing Tasman, what advice would you have for your kids? Kind of
for my kids, I think, don't be scared of ambition. I think if it's humanly possible, it can be done, and don't be scared of chasing that and throwing everything at that while you're young enough to. I think that's my advice. I think have the wild dreams, swing the bat as hard and as strong as you can at those big dreams, and then you will fail a number of times. You'll fall on your face, but you will learn more than anything, and you'll figure out where you want to be and what you do. So I think for me, it's just don't be afraid of ambition. Go for it, believe it. You can do it, and it's just I think that's sometimes as founders or as kids or anything, we're scared of ambition, and it's just such a wonderful thing to grasp. And if we can fuel people with the skills and self-belief that they can be ambitious and they can do it, and that it's okay to talk about it, and it's okay to build a plan about how to do it, then that's an awesome thing. So I think just don't be afraid of ambition. Chase it, love it, wrap your arms around it, and say it out loud. And that would be what I'd want as many people as possible to be comfortable with.
I love that. Great. Well, thank you so much, Shaun. Awesome. Thank you.
Oh, thanks, guys. Good to catch up. It's probably the longest I've ever spoken to you, Mark. So that was awesome. That was good.
Awesome, Shaun. Thanks for your time, man. Really appreciate it.
Yeah. See ya. Bye.
Thank you for tuning in to TechMates. If you enjoyed this episode, be sure to subscribe, leave a review, and share it with friends. We'll be back soon with more stories of Kiwi and Aussie founders reshaping the future and disrupting down under. Until next time, keep dreaming big and daring to disrupt.